Welcome to the Farms.com Risk Management Market School video series. This video series being brought to you by DeKalb Brand Seed to educate producers across Canada on how to do a better job of grain commodity marketing. In today's educational market school video, we're going to focus on the 2012 U.S. drought that caused a short crop long tail. It's an old adage called short crop long tail, and we're going to also talk about what defines an old crop long tail and how 2012 qualifies and what impact that's going to have on 2013 prices. So the U.S. drought 2012 was the warmest in 91 years. It destroyed a lot of yields. It was the worst since 1956. Yields have come down considerably. In fact, the yield is down about 44 bushels per acre. You can see that one of the biggest drops in a long time there on the chart. U.S. Drought Monitor. If you go back to some of my old video series, I show a map where the Midwest is white, and now you can see how severe and dry it is. In fact, the U.S. Drought Monitor is saying that this drought in the U.S. is concerning. It's getting worse and deeper. There's a lot of radio stations talking about if we don't start to get some moisture soon, it's going to be a problem as we move into 2013. So we can't rule out another weather problem next summer, but here's your long tail short crop year. It's similar to 1988, where you get the big spike in prices. You get the peak sometime between July and September, and then you get the long tail. Why the long tail? Well, the big spike in prices gives the farmer incentive to grow a lot more acres the following year, and then demand has to be adjusted for that new supply, and that's why you get that lower gradual grind, lower over time. So what qualifies as a short crop? Well, the number one is prices have to spike like they did this year in 1988. Sharply higher to ration demand. Corn futures were up 49% in 1 month. They're actually up about 29% since the rise in since the beginning of the year. A short crop followed by a larger crop. So, you know, we planted 97.5 million this year in the U.S. Looks like we're going to plant about another 97 plus next year. Farmers are expected to maybe plant a little bit more than that. Once the peak hits, for an extended period of time, you start to get declines over time because you got to bring demand back in line with that new production. Short crop U.S. corn years and yields, you can see that when you get the drought type effect, you get double-digit declines in yields. Not only does it happen on corn, but it also happens on soybeans. However, be careful. Don't get caught in the trap where you think that this is just going to continue. The following year, if we assume 97.5 million acres with a trendline yield back to 160, 167, if Mother Nature provides a normal growing season, and we adjust demand a little bit higher, because you know that's what the USDA is going to do, we get ending stocks go back to 1.92 plus billion bushels from the tight 700 or 600 million in 2012, and that's naturally going to take that price to $3-4. So manage your risk. That is a big risk as you move into 2013. We expected to see that this year, and again, because of the drought, we didn't get that $4 corn. On soybeans, similar situation. Going to plant about almost 79.9 million acres at a 42 to 45 yield. We're going to get those ending stocks around that 100 million to jump to about 200 to 400 depending on what happens with demand. So that, again, very bearish prices. And then you also got that big South American crop that potentially over the next 6 months could be very, very large and will weigh on soybean prices. You know the top is in when the market starts to roll over, when the managed money is very long and the media has factored in all the news. And once you start to cross below those moving averages, we've talked about technical analysis and other video series, this market starts to turn down and becomes very bearish. Now, in the month of September, grain prices typically will fall. Went back between 2009 and 2011, 12, since we're past September now. And you can see some of the declines in the grain prices. However, October seems to be a turnaround month where maybe new money, a new quarter, tends to drive prices a little higher. So bottom line, don't forget to manage your risk and volatility in 2013. Booking forward corn at 650 or 2013 beans at 13 and a half to 14, canola at 550, wheat at 8 3/4, 9 makes a lot of common sense. At 50% pays a lot of bills. You know your feed inputs are not going to come down. In fact, seed prices are expected to go up another 5%. At 50% though, you're also not overbooked or underbooked. You still got a little bit more left to sell if prices do go higher in case Mother Nature does not cooperate. So in our next video series, we're going to look at some of the grain industry jargon and vocabulary and what it all means. Thanks for joining us today, and we hope we shed some light and some on the topic of old adage, short crop, long tail. We look forward to seeing you next time. Take care.